Hey everybody, Boris Slots from BK Forex. Welcome to our Forex Weekly Technicals for 0414, 0419. Where are the trades? Really good question, because actually I think the trades next week are going to be problematic. We obviously have, of course, Easter, Passover holidays, Easter Friday, markets are closed. Very little really meaningful data. We basically have only Chinese data, a smattering of UK data that's going to be worth take a look at, and retail sales out of US at the beginning of the week. Now, when you look at the euro clearly had a very, very surprising and quite strong comeback against the dollar this week. Traded all the way up from 37 to practically 39, 200 points. In an environment where really U.S. data was not horrible. I mean, the NFPs on Friday were not bad. Generally, the critical thing I think that's happening in the euro is that the ECB is not dovish enough, and the Fed is not hawkish enough. It's really essentially a question of expectations. And the euro is furthermore boosted by this overlay of incredibly positive current account deficit. There's just a lot of surplus, current account surplus. There's just so much surplus coming into Europe as the Germans effectively are basically earning all this money and saving it, that it makes the currency somewhat Teflon. But there are clearly a lot of risks on the horizon for euro. One, most important, is that the stronger the euro is, the higher the prospect of deflation. It's actually a self-defeating cycle, because the stronger the euro is, the more it keeps price levels lower, the more it keeps the prospect of deflation lower. That means the ECB is going to have to act, much as they don't like to, sooner rather than later. And there's always that specter hanging over it. Furthermore, I think anywhere above 140, or certainly between 39 and 140, German corporates get incredibly antsy about the higher exchange rate, because it becomes very uncompetitive for them, especially in a weakened China, where demand out of China now is really starting to fall off, and a relatively reawakened U.S. that could compete against Germany in a lot of industrial goods, as well as the Japanese, who still is getting a benefit of a weaker yen. So all across the board, it's not so hunky-dory for the Euroland. But having said this, the technicals are certainly not showing any kind of serious weakness. The only weakness that we see so far is obviously this resist around the 39s. Kind of, we probed it today, we failed it, we came back down. It's a hesitation candle. The key thing with the euro, though, is that even if we do cross 39, the really big test is this 39, 39.50, this whole big corridor. That's a very, very thick corridor that's got to overcome, and you really need I think, significant anti-dollar kind of a push, or conviction. I think the key thing is conviction here, that let's say European inflation data suddenly shows signs of life, and therefore almost assures the market that the ECB is going to remain stationary. We'll see if that happens, but to me, fundamentally, there's still, I think, a lot of doubt in this rally. It looks to me like a dead cat rally, especially if we fail. This is going to be an interesting thing. If we fail around these levels, we will effectively then create a pretty negative technical picture with a lower high, and then you have a lot more confidence that the short here could be significant. At very minimum, you have a 37 test, but then, of course, if you really have a much longer distribution wave, then you could have a move all the way out to 3,500. Very hard to obviously pick tops and bottoms in FX, but if you're going to trade probabilities, certainly for right now, it looks to be a relatively low-risk short here at this point, because 140 is pretty much your stop as far as the trade goes. So let's take a look at, let me just delete all these lines. Let's take a look at the yen, which also, really another surprising aspect, that the dollar has just simply fallen out of bed. Yields lower, equity markets starting to collapse, sort of a fear of a slowdown, or much more, it reminds me very much of this statement that the stock market has predicted 10 out of the last 5 recessions. It could just simply be correction in the financials, and therefore the decline in the yen eventually is going to be changed. For now, technically, the key thing to look here to me is this one-on-one level. A break here, sort of a break around to, let's say, 170, 160, really very negative construct, because you're talking about this massive wall of support that suddenly gets broken, that suddenly I think creates, at very minimum, huge momentum towards taking out the stops at 100. Because once you get into 160s, 150s, it's only 50 points away from slaughtering all these long-held long-held hedge positions that have been put on, for multi-month positions, nobody thinking that 100 is going to get taken out, and it probably could get taken out. So it is very vulnerable. But for now, obviously, they're propping it all up. There's probably a lot of optionality as well at this level. So for now, as long as this thing holds, it's kind of an interesting thing, though, is if we do hold this for a day or two, the prospect for a pop back up really becomes much stronger. And then you have perhaps another third wave of rally, slow but steady rally to the upside. So I'll be watching it both ways here to see some potential trades next week as we develop. Cable, on the other hand, could be a really interesting mover. So cable right now kind of looks weak, right? So yeah, we did a double top here, 68, so we couldn't hold a double top. But we got a lot of UK data on the plate this week. We have the CPI data, we have labor data. Let's just, for argument's sake, say it blows that out of the water. Let's say CPI actually gets a little hotter, really putting some pressure on the BOE, and then labor looks pretty good. At that point, the prospect of taking out the highs now on a third try looks much stronger. And then you have a move to 69, and then the real stall is going to be about 170. But once we get past here, this drive towards 170 is going to be pretty strong. That, in fact, actually then creates a very interesting cross trade, because if we get strength in the pound and euro just kind of wallows, then we have the potential of breaking all the way back down below the lows over here, and then eventually possibly even moving towards the 81.50 lows that we had at the beginning of the year. So this cross trade also looking very good right now. Could be a very different story as the week develops if we get some funda flips, as I would call them, the other way. So just worth considering as far as cable goes. Aussie is done well, kind of holding bid here, but clearly, I mean, this was a massive rally up. We'll have to see if the RBA decides that 95 is just intolerable. For now, they've been able to absorb it. Australian data has been surprisingly robust. We don't have too much on the calendar next week, but we do have some data points. More importantly, we have Chinese data coming out, and the Chinese data dump, while used to be much more important, pretty much used to be critical to Aussie, not as important anymore, because there's been a perception of decoupling between the Chinese economy and the Australian economy, in a sense that even though the Chinese economy is kind of certainly falling over the cliff and definitely slowing down, Australia has been able to diversify away from just being a pure mining export business to a more balanced economy, and therefore is less affected by the decline in demand in China. But still, we'll have to see how the Chinese data prints. I do think that if the Chinese data across the board is disappointing, it will weigh on the Aussie, and this 95 is going to become distant memory. So we may have a correction. The correction takes us initially to sort of this 93, which is where we broke out from, but honestly, it really takes us pretty much to 92.50. This former chop area now is going to become support area as potentially on a correct way. Flip side, if Aussie really catches a tailwind, and we can take out the highs over here, sort of around 94.60. 95 really comes into view, and there's just going to be a tremendous amount of drive to take that optionality out. Having taken that optionality out over there, though, it's going to be interesting because, we're looking here. This is the 95s. Let me just show you on the charts here. This is the 95s. There's definitely a little bit of overhang here, so I don't think a move through 95 will be definitive. But a move to 95 could very well be in the cards if we get some positive moves in play next week. Kiwi kind of holding out. Kiwi's doing relatively well. Again, trading a yield play, but I think in many ways playing second fiddle to the Aussie. And also, Kiwi much more dependent on China. And if there's a really negative Chinese print out of China, I think Kiwi is vulnerable to come right back towards the 85 handle. So for Kiwi, we need to see 87.50 taken out to get up to fresh multi-year highs around 88. But that's a pretty long way. It's about 70 points away, and we'll have to see if it can go. This is a relatively positive candle today that it kind of tested the lows, came back up. And what will be really, really bullish is if we took out the highs over here and closed above 87.50. Then you have a lot of confidence that you have a potential trade towards the 8800s. But for now, the jury is very much still out. And Dollar CAD, what a surprise, finally starting to act like the dog that it was. Dollar CAD was sort of trading like a calm dollar for a while, but it eventually started, to show its true colors. Canadian economy clearly not as well balanced as the as the Australian economy or the New Zealand economy, and therefore not as strong a calm dollar trade. We have the BOC meeting next week, so it's going to be interesting to see what they say. It's unlikely they're going to change their tune. I wonder though. I mean, it'd be interesting to see if they get a little more dovish, and if they do lay open the prospect of further rate cuts, if they feel that it's necessary to stimulate the economy. I kind of doubt it, but irrespective, I don't know if there's going to be a big mover unless they sort of shock the market. For now, though, this 109 clear support. We broke in this calm dollar rally. We definitely broke it for a while, but now 2 days in a row where we've come back around it. Which, by the way, today was an interesting day because this weakness in the caddy definitely showed itself as the strength in Aussie CAD. And Aussie CAD now, if we have a little bit of a tailwind from the China data, really looks to be an interesting cross trade post-China data through the 103.50s, perhaps even into the 104s. It's one of those crosses that really kind of sneaks up on you, but it's really worth considering against the background that we see now. Let's take a look at just the euro complex. Let's see if there's anything interesting going on. Euro yen just dead in the water because one gets pulled, the other one gets pushed, and it's just there's not much to say. Euro pound is an interesting story. So yes, euro definitely showing some strength, but as I said, if we see hot UK data, we could see a big turn here, at least back down to 82.50, but a break of 82.50 really opens up the prospect of 82 for euro pound. And then euro Aussie, still, in my opinion, even though we had a big bounce this week, but look at this kind of a bounce and a flame out. Still, essentially, we have this consolidation zone. Basically, what we have in euro Aussie is the market saying, okay, we sold off. We found support 47. We're pretty much going to find resistance 49. That's going to be the bounce. But if we start breaking this level below 47 again, then 45 definitely comes into view. So that's the kind of interesting look here. Once we get below this level, we have a chance here to take 45s. Conversely, if we have weakness in the Aussie and it just and euro keeps its Teflon self back, then it covers itself up, and then a close above 49 pretty much puts in a relatively decent bottom here with a prospect of going back up to 150. So watch it both ways. It's within 100 points of kind of giving you a signal of which way it's going to go next week. On the pound complex, again, pound yen, same story, kind of dead in the water, nothing going on here. Looks actually a little bit weak and looks distributive. I mean, if you look at the pound yen, it looks very distributive here, but also very hard to say, because if we have positive pound and dollar yen holds the bid here, then we have effectively what looks like a negative trade turn right back into a positive trade. This is actually the interesting thing about technical analysis. Few people will tell you this. So here's a negative look, right? Lower highs and kind of a potential sell down mode, but a flip of this structure puts in higher lows. Close above 71 puts in a higher low and a prospect of a run back up to 173. So retest. So depending on, it's kind of one of those tests. What do you see in the picture? You can see positive or negative depending on how the structure looks to you. Lastly, let's just take a look at pound odd. That looks relatively weak still. Continues to be, to the downside here. And again, if Audi comes out towards 95, we have a reasonable chance here. Now, conversely, by the way, the other interesting thing I think is if we get weak UK data and pound starts to correct and Aussie kind of holds bid, this becomes a really interesting trade. So I think, Aussie on the vol side could be really expressed well against the cable as well. So the 77 now is the big breakdown area, and a breakdown takes us to 75 on a major pound distribution. This is really trade against the pound with Aussie holding still. As a potential idea for next week. Anyways, guys, there's a lot of interesting ideas to consider. It's a two-way market, so be very flexible. Look at both sides of the trade before you make any decisions. Wishing you guys the best of luck. Boris Schlossberg over now.